In Nigeria, people are waiting all day at banks and ATMs to withdraw only enough money to last a day. Violence has erupted in public spaces, with individuals attacking employees and demonstrators setting buildings on fire. This is because, in May 2023, new Nigerian President Bola Tinubu cut fuel subsidies that had been in place since the 1970s and abandoned a long-standing currency peg allowing the naira to trade freely in the market. As a result, the local currency has plummeted, driving inflation to more than 35%. Employees stopped going to work when their annual salary wouldn't even pay for their bus ride home. Companies began modelling their products to fit the income bracket of consumers by selling in smaller sachets, since people couldn't afford larger packages. Over 75% of households in Nigeria live on $3 to $5 per day, which is huge. So, how did Nigeria get here? And how is tech booming in Nigeria despite a weak economy? Nigeria, a nation of striking contrasts and boundless potential, is home to over 250 ethnic groups and 500 different languages, each with its own diverse culture and unique art. It is Africa's most populous country, with 200 million people, and was the continent's largest economy until 2022. Now it has slipped to 4th place. It is a land where contrasts coexist, from the bustling streets of Lagos to the serene savannas, and from vast oil fields to thriving tech hubs. Nigeria also boasts the 2nd largest film industry in the world by output. Nollywood, the local answer to Hollywood, produces about 2,500 films a year, and Nigerian musicians like Rema, Burna Boy and Wizkid pack stadiums around the world. Unfortunately, Nigeria's boundless potential is often wasted. In addition to being blessed with cultural and natural beauty, Nigeria is also cursed with an abundance of crude oil and natural gas, leading to corruption, crime and violence. To understand Nigeria's economic journey, we must first look to its past. In the early 20th century, Nigeria was a key agricultural exporter under British colonial rule. Products like cocoa, palm oil and groundnuts were the backbone of its economy. However, the discovery of oil in the Niger Delta in the 1950s marked a seismic shift in Nigeria's economic trajectory. As global demand for oil surged, Nigeria's vast reserves became a valuable asset. The government and multinational oil companies invested heavily in exploration and extraction, setting the stage for a transformation from an agricultural to an oil-dependent economy. The 1970s were a time of prosperity for Nigeria. The oil boom brought immense revenues, transforming the country almost overnight. Oil exports surged, and Nigeria rapidly became the leading oil producer in Africa. The oil revenues led to a dramatic rise in government spending and investment in infrastructure. High oil prices allowed the government to fund ambitious projects, from modernizing Lagos to developing transportation networks. The country enjoyed a period of rapid economic growth and increasing global influence. As oil became the primary source of revenue, Nigeria's economy grew increasingly dependent on this single commodity. Oil exports dominated the nation's trade, and the agricultural sector was neglected. The focus on oil led to a decline in agricultural production, disrupting traditional livelihoods and reducing the country's economic diversity. Nigeria's reliance on oil exposed it to the volatility of global oil markets. The 1980s and 1990s saw dramatic fluctuations in oil prices, leading to economic instability. When oil prices fell, Nigeria faced severe recessions, reduced government revenues, and increased debt. The dependency on oil left the economy vulnerable to external shocks and underscored the need for diversification. This black gold has the potential to fuel prosperity and development. However, the immense wealth generated by oil has also been a double-edged sword, fueling a cycle of corruption and mismanagement that has plagued the country's economic and political systems. This is the story of how Nigeria's oil boom led to a crisis of corruption. As oil revenues grew, so did the allure of easy money. Corruption took root in various forms. Embezzlement, kickbacks, and fraudulent contracts became common. The oil sector, controlled by a few elite figures, became a breeding ground for corruption. State institutions designed to regulate and manage oil wealth were undermined by bribery and mismanagement, leaving the public increasingly disenfranchised. Power corrupts. So too does a resource-rich economy like Nigeria's, where easy access to oil money has encouraged bribery and mismanagement. According to the Corruption Perception Index, Nigeria ranks 32nd from the bottom. In 2014, a respected former central bank governor lost his job after claiming that $20 billion had been stolen. But this is just a small part of the damage caused by corruption. The bigger question is how much better off Nigeria could be if its leaders were more honest. By 2030, the size of Africa's biggest economy should triple in real terms. If Nigeria manages to reduce corruption to levels comparable to Malaysia, itself hardly above suspicion, its economy could be some 37% bigger still. Some of this damage is visible. When public cash, most of which comes from oil pumped in the southern Niger Delta, is siphoned off, investment in health, education, and roads suffers. But corruption also affects the economy in more insidious ways. Public institutions often hire the family and friends of the boss rather than the best candidates. In turn, those institutions become more inefficient and deliver less of what they're meant to, whether it is education or roads. In addition, countries where corruption is high attract less foreign investment. Nigeria's foreign direct investment has been falling since 2012. This may in part explain why, despite its oil wealth, there is a rising share of Nigerians classified as below the poverty line. The living standards of Nigerians have dropped, and the share of the global population living below the extreme poverty line in Nigeria has increased to 12%. That's why Nigeria's abundant oil reserves are really a curse. In Nigeria, oil has been more of a curse than a blessing. Weak state institutions and poor governance in managing vast revenues have prevented the country from realizing its full potential in a textbook example of the resource curse. The subject of extensive research, the resource curse, or paradox of plenty, describes an inverse relationship where wealth brings detrimental impacts. Nigeria, the largest oil producer in Africa, the 6th largest global exporter, and holder of the 10th largest proven oil reserves in the world, is arguably such a cursed nation. Dependent on their natural resource exports, these countries have, on average, lower growth rates, lower levels of human development, and more inequality and poverty. They also tend to have worse institutions and more conflict than resource-poor economies. The resource curse happens mainly due to poor political governance and weak institutions. It's not just about having oil, but how it's managed. Multinationals, national and foreign governments, foreign financiers, investors, and the structures of states and private actors in oil-exporting countries all play a role. Resource wealth can have a devastating impact. Oil-exporting nations like Nigeria, Venezuela, Angola, and the DRC have seen their economies and livelihoods suffer. However, some countries like Norway, Canada, and Botswana have avoided the curse through strong state management and institutions that resist corruption. This is crucial because the resource curse is closely linked to corruption, a global problem that is the biggest obstacle to economic and social development, especially in less developed countries. Worldwide, an estimated $2 trillion is lost to corruption annually. This amount could eradicate poverty, educate all the world's children, cure malaria, and bridge the global infrastructure gap. Nigeria's economic troubles have also led to a sharp rise in crime. The poor economy has fueled the violence that affects much of the country, with more people being killed by jihadists, kidnappers, bandits, or the army. While COVID-19 has impacted economies everywhere, Nigeria's economic issues started before the pandemic. GDP per person has fallen every year since 2015, when oil prices dropped. However, when oil prices surge, amazing things can happen. In Saudi Arabia, a futuristic city is planned. complete with an artificial moon made of drones. Angola's long-struggling currency has recently become one of the strongest performers against the US dollar. But Nigeria hasn't seen such benefits. Its economic performance has been mostly flat or negative. The main reason Nigeria has benefited so little from high oil prices is that production has dropped to 1.13 million barrels per day, the lowest in over 50 years. This decline is one reason the oil industry has dragged down overall economic growth. Output has been slowly decreasing since 2005 and has plunged this year, and Angola's output recently surpassed Nigeria's. One reason for the falling output is that the state oil company is so short of cash after paying for petrol subsidies that it struggles to cover the production costs for pumping crude oil. Another issue is that a lot of oil is never counted as part of Nigeria's output because it has been stolen. Estimates vary, but thieves are taking around 108,000 barrels a day, which is about 5% to 20% of production. One way to steal is to overload legitimate shipments with more oil than is declared. Another is to break into pipelines and siphon oil off, then cook it up in bush refineries before selling. Plenty of stolen crude goes straight into the international market. Small boats navigate the delta's canals, filling up from illegally tapped pipelines and then deliver it to offshore tankers or floating oil platforms. Although oil makes up about 9% of Nigeria's GDP, it accounts for 80% of export earnings and around half of government revenues. The long slump in oil prices, from over $100 a barrel in 2014 to less than half that for most of last year, has squeezed the supply of foreign exchange. Normally, economies would adjust by letting their exchange rates fall, which makes imports more expensive and can lead to short-term inflation. However, this usually helps boost exports by making them more competitive, but that hasn't worked for Nigeria. Sustained growth in exports needs more than just opening borders. Many businesses struggle because they are bogged down by red tape and government failures. Government is the biggest problem for business in Nigeria. Electricity blackouts are frustratingly common, roads are often in poor condition, and ports are congested. Moving a container just 20 kilometers from the port of Lagos to the city can cost $4,000. Almost as much as shipping it 12,000 kilometers from China. Nigeria ranks 131st out of 190 countries on the World Bank's Ease of Doing Business Index. Although some industries, like information technology, are growing despite the weak economy, especially Fintech. Nigeria's Fintech sector is booming, driven by a young, tech-savvy population, high mobile phone usage, and supportive government policies. The fintech landscape is diverse, with companies offering a wide range of services. For example, FairMoney provides instant loans, PiggyVest helps people save, and Bamboo allows Nigerians to invest abroad, even with a shortage of dollars. There's a lot of excitement about fintech in Africa. From 2017 to 2023, the number of tech startups in Nigeria tripled, reaching around 217 companies. The long-term potential in Nigeria is huge. With a population of around 200 million now, it's expected to surpass America's by 2050. Currently, about 95% of transactions still involve cash. However, some investors worry that the excitement around fintech might be overblown, given the country's unpredictable regulations and ongoing economic troubles. Running a fintech company in Nigeria is challenging. Power and internet are unreliable, and the tough economy is the biggest hurdle. While startups everywhere often paint an overly optimistic picture, many fintechs in Nigeria face a smaller market than expected. With over 40% of Nigerians living on less than $1.90 a day, inflation at 35%, and population growth outpacing GDP growth, the real market is limited. Looking ahead, Nigeria's future depends on innovation and diversification. The tech sector, sometimes called Silicon Lagoon, is attracting global interest with startups in fintech, agritech, and e-commerce. Investments in renewable energy like solar and wind aim to reduce reliance on oil and address energy shortages. Young entrepreneurs are leading the way. using technology to tackle local problems and create new opportunities. Nigeria's rich resources, energetic people, and growing sectors offer hope for a more balanced and sustainable future. Despite economic challenges, the country's spirit of innovation and determination remains promising.